Hello and welcome to another video here on StratCap. On this channel, we regularly analyze companies that are strongly influenced by global economic or geopolitical developments. And one company that clearly fits into this category right now is Rheinmetall. Since the beginning of the Ukraine war in 2022, the security situation in Europe has changed dramatically. Many European countries are increasing their defense budgets, expanding their military capabilities, and investing more heavily in modern defense technology. For companies in the defense industry, this creates a completely different market environment. So the key question is this: is Rheinmetall truly one of the biggest beneficiaries of Europe's rearmament, or is a large part of that expectation already priced into the stock? That is exactly what we will analyze step by step in this video. But before we start, a quick disclaimer. This video is for informational purposes only and does not constitute financial advice. Let's begin with a quick overview of the company's key numbers. Rheinmetall currently has a market capitalization of roughly 75 billion euros. Revenue recently came in at around 7.2 billion euros in 2024. Another very important figure is the company's order backlog, which currently stands at about 38 billion euros. The order backlog basically represents the value of contracts that have already been secured, but still need to be fulfilled in the coming years. In other words, Rheinmetall already has contracts in place that represent multiple years of revenue. We can also see that around 80% of the company's business comes directly from the defense sector. So today, Rheinmetall is clearly a defense-focused company. Now, let's take a look at how large the company actually is from an operational perspective. Rheinmetall employs around 30,000 people worldwide. These employees work across more than 40 production sites, and the company is now active in more than 20 countries. This shows that Rheinmetall is no longer just a German company, but a globally positioned defense supplier. Another important point is again the 38 billion euro order backlog, which is described here as a record level. A backlog of this size mainly means one thing: high visibility for future revenue. Projects in the defense sector are often long-term programs that can run for many years. That creates relatively stable revenue streams. Now let's look at where Rheinmetall actually generates its revenue. The company is divided into several key segments. The largest segment is vehicle systems, which includes military vehicles and accounts for about 35% of the business. This includes armored platforms and vehicles such as the Lynx infantry fighting vehicle. The second major segment is weapon and ammunition, representing roughly 30% of the business. This segment is particularly important right now because modern conflicts require enormous amounts of artillery ammunition. The third segment is electronic solutions, with around 20% of revenue. This includes sensors, electronic warfare systems, and modern military technologies. And finally, there is power systems, with about 15% focusing on military propulsion and energy systems. This structure shows that Rheinmetall is not only producing traditional weapons, but has a relatively broad defense technology portfolio. Now let's look at some of the company's key capabilities. For example, Rheinmetall is an important supplier of components for the Leopard 2 battle tank. The Leopard 2 is one of the most widely used NATO tank systems and is operated by many European countries. Another central area is artillery ammunition. Here, we currently see rapidly increasing demand. The war in Ukraine has shown how quickly modern conflicts can consume massive quantities of ammunition. Many Western countries are therefore trying to replenish their stockpiles, while also expanding production capacity. Another important product is the Lynx infantry fighting vehicle. This vehicle has already been exported to countries such as Australia and is part of several international procurement programs. Rheinmetall is also investing heavily in military sensors and drone defense systems. Drones are becoming increasingly important in modern warfare. A major growth driver for Rheinmetall is the broader market environment. Many European countries are significantly increasing their defense budgets. A key benchmark here is the NATO target of spending 2% of GDP on defense. Many countries were below this level for years, but are now moving toward that target. Germany, for example, created a special defense fund of more than 100 billion euros. This means that enormous amounts of money could be invested in military equipment and infrastructure in the coming years. Another important point is that military investments are often multi-year programs. Once a country starts modernizing its armed forces, the process usually continues for many years. One particularly interesting indicator is the order backlog. It increased from around 14 billion euros in 2020 to about 38 billion euros in 2024. That represents almost a threefold increase within 4 years. The backlog now represents more than 5 times the company's annual revenue. This means Rheinmetall already has contracts that could theoretically secure revenue for several years. These contracts include framework agreements with Germany, Hungary, Lithuania, and other NATO members. We can also see a clear growth trend in revenue. Revenue increased from about 5.7 billion euros in 2021 to around 7.2 billion euros in 2024. That corresponds to an average annual growth rate of roughly 8%. Another important factor is the operating margin. It has been improving due to higher production utilization and stronger pricing power. Many analysts therefore expect continued double-digit growth in the coming years. Looking ahead, we can identify several structural growth drivers. One major factor is the expansion of ammunition production. Rheinmetall is currently building new production lines across Germany and Europe. Production capacity could potentially double by 2026. Another driver is the broader trend of European rearmament. Many countries are investing long-term in their military capabilities. A third factor is NATO procurement programs, which can generate long-term contracts. And finally, the market for drone defense systems is also growing, where Rheinmetall is active with its Skyranger system. Despite these positive developments, there are, of course, also risks. One important risk is political dependency. Defense budgets are determined by governments, and political priorities can change. Another risk involves budget fluctuations or geopolitical changes. There are also operational risks, such as supply chain issues or shortages of skilled labor. And finally, there is the valuation risk. If high expectations are already priced into the stock, this brings us to the central question of valuation. In a bear case, where defense spending stagnates, the company's market capitalization could be closer to 55 billion euros. In the base case, with moderate growth and defense budgets around the NATO target, the valuation could remain around 75 billion euros. And in a bull case, where Europe significantly accelerates its rearmament, the valuation could potentially move toward 100 billion euros or more. So when we put everything together, the overall picture becomes relatively clear. Rheinmetall is currently one of the central companies in the European defense industry. The order backlog is at record levels. Demand for military equipment is increasing, and the geopolitical environment provides strong structural tailwinds. At the same time, the current valuation already reflects part of these expectations. The future performance of the company will therefore largely depend on how European defense spending develops in the long term. And now I'm curious to hear your opinion. Do you think Rheinmetall can continue growing in the coming years? Or do you believe much of the positive outlook is already priced into the stock? Let me know your thoughts in the comments. Thanks for watching, and see you in the next video.